The difference between winning and losing is most often not quitting. Walt Disney. And my friends, that bears so true in what we do each and every day. We spend 10 to 15 minutes charting these markets. It's exciting. It's fun. I do it every day. I do it for free for you every day. And of course, for myself. Let's jump into these markets. We see stocks and bonds and Bitcoin up. Gold is the only downer for the day, but it has been a down week for the S&P. Look at all that volume. Look at the down movement where things stroked down. Look at the 2-day chart where we have, 3 candles moving down to lower lows. Look at all the volume. Just the first day of the latest 2-day candle, we got all that volume. You can see where things jumped down in the morning and then spiked up in the afternoon, ending with a doji on the Heiken Ashi candlestick up 1.56%. For the S&P, that's a decent up day after all of that down activity. Where does that lead us? Well, it leads us to a probability as we end the week with a potential return of some bullish movement as things are hitting some bottoms here as far as the charts go, as far as resistance goes, as far as our analysis goes. We are looking at the potential of jumping into the S&P with a buy near the 591, 593 mark with a stop loss if you're into stop losses at 588. If indeed the market does slow down at that point, we see it right now at 594.18. And if indeed, and again, a probability of about 70% bullish, if indeed we do find things bottoming out there and turning around to stroke up. We saw this happen back on the morning of February the 26th. Things had gone down for quite a while, slowed down. We got a green spinning top, but then slowly over the next day slid sideways down further and then, of course, popped down hard on Thursday afternoon and Friday morning. But then we had that recovery in the afternoon. So again, as we look at where we are, we've penetrated that rather weak weekly trend line. We could draw it a little better, but that is only connecting 2 candles. But we've fallen well off that high that we had hit before. So again, as we look at things, we've got our entry point around the 591 to 593. The target, if indeed it does turn around, settle down and move up, is the 598 is our first target. Second target is 602. So, between about $7 and $10 of up movement. And right now, with what happened today, we see the probability over the next 5 days of that happening at 70%. That is where we are with the S&P 500. Let's move on to the NASDAQ 100, the tech stocks. Again, we are bullish, but we are consolidating below the 512 mark. As you can see, we closed at 508.17. Again, similar to the S&P, we see these 3 2-day down candles. We see down in the morning and recovering some in the afternoon after a strong down week. As we look at where we are, we see our buy point at around the 507 mark up to about the 5. And we're at the 508 right now. So we want to see things settle out and then start to move up. We don't want to just jump into something that's trending down and tracking down. We're only about 6 to 8% bullish on this, but the expected up movement is between $5 and $7 again over the next 5 days. Our first target for profits is around the 512 mark. Second target for profits is around the 515 mark. And as we look at things, we are seeing, as I'm looking for things like support and resistance, we see some support around the 507.37 mark. We see resistance to the 512.37. So again, as you're looking at a stop loss that you might want to set, again, around the 505 mark is not a bad place to do that. and we'll just continue to watch and track as we go into the week. But again, it was a decent update on Friday after a week of lots of down movement. Where are we on 20-year U.S. government bonds? We are 75% bullish. Of course, we've had a nice bullish week. We're up today alone, 1.23%. Nice green up candle for the week. Nice strong volume. Not as much volume on the morning candle as we had in the afternoon as things stroked up higher. First day of the latest 2-day candle. Look at that. We're not too far away from average volume just on the first day. So we are strongly bullish, 75%. Look for $3 to $4 building. Our target is around the $94 mark. We punch up to that. Second target is around the $96 mark. And again, entry is about where we are now, but you want to watch how the markets start off and see if there is some building interest in continuing to move up further as we jump in on the next Monday and as we go through those 5 days of that week. Let's move on to gold. Gold pulling back. It was only downer for the day, and you can see how gold had just shot up over the last many, many weeks, and then we have the green spinning top. That ends us up a little bit bearish, 65%. Again, not anything I like to trade on. I like the 80% plus category, but we're about 65% bearish as we end the week. We see the entry point somewhere around where it is now, going down to the first target of 261, the second target of 258, $2 to $3. Like we said, we are bearish at this point. You can look at this 2-day chart and see we are almost to average volume on that first pullback through the weekly trend line. And then the first day of the latest candle, more down movement, more in the morning, less in the afternoon. And you can see it had more volume in the afternoon, but average, above average in the morning, average in the afternoon. So again, that leads us to that bearish, somewhat slightly bearish prediction. And lastly, we'll take a look at Bitcoin. Now, Bitcoin bounced up some for the day. Looks like that was in the afternoon. Again, I'm looking at the Heikin-Ashi candlesticks. So not the same as a regular candlestick. If you don't know what that's about, don't understand Heikin-Ashi, I'll put at the end of today's video a great training for you on that. If you haven't taken that before, we have a really good one. It explains Heikin-Ashi candlesticks means average pace is what I'm told. I don't speak Japanese, but that's what I'm told it means. And it does help you see the average pace of price movement. It helps take out a lot of the fluxing that you see in the regular candlesticks that can get very confusing. Makes it easier to see and to understand. But as we look at where we are, up 1.02%, still though bearish at 68% on Bitcoin. We see the entry point at the 2380 where it is right now to the 2450 or so. First target 2250 and then 2150 for the second target, down about $2. Now, as we look at Bitcoin, I had some other notes for you guys. Again, looking at that short entry point, a stop loss around the $25 mark in case it does go against you. And again, not particularly good probabilities on there, but around 68% in that continued bearish down move. So again, what are we hoping for with Bitcoin? I want to see it continue to crank down, then make a nice bottom, and then a beautiful picture postcard perfect turnaround where we have a nice red down candle with a decent size wick, not this big, not that much volatility, but where it ends and then it turns around in what? A green spinning top with nice volume on both the bottom and the turnaround. Then we feel comfortable jumping in and riding that pony up. And we'll be with you every step of the way as we track these charts and these markets on a daily basis. I hope that you are enjoying The grids that we are giving you, again, if you're not a subscriber, you're not getting that grid. Be sure to go to chartingwealth.com, sign up for free. We never spam, we never sell that list. But you get an email every day, and it gives you the grid of things like the ticker, the entry, the target 1, target 2, expected movement, probability. And when I say expected movement, dollar movement, the probability of that movement helps you out, again, as you practice trade, track, and move through these charts. We want you to learn by doing. It's not that hard. It just takes some time. If you have any questions, problems, concerns, don't hesitate to reach out to us. cw@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth.